Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Thursday, May 19th, 2016. We are looking at the Dow Jones Industrial Average off about 100 points, 91 to be exact, trading at 17,435. Market has been under pressure yesterday as well as today, and we have seen a pretty dramatic decline ever since the Dow reached 18,000. It has really declined and eroded from there. Standard & Poor's also trading lower. Now it is currently down about 2.5 points at 2039. It has traded to a low, extreme lows across the board today in many of the markets that we follow, but the low today is 2022 with a high of 2044. And as I said, we're currently trading off about 2.5 at 2039 on the day. So traders, we are looking at a daily chart, Standard & Poor's 500. This, of course, is the E-mini. And what I believe is most noteworthy, just as we saw in the precious metals markets, where we made an extreme low and we had a close well off of the low, but still down on the day, we're really seeing kind of very similar action in the Standard & Poor's 500, as well as the Dow Jones Industrial. Take a look at this low. Low comes in at around 2020. Now realize our 200-day moving average is now sitting at 2005. And we talked about the fact over the last couple of days that as this market broke below a 50-day, the shorter term of these moving averages, we saw a substantial or a high probability, I should say, that we would see this market drift lower and possibly drift as low as the 200-day moving average. Now, we're not considered to be in any kind of a bear market unless we break through that particular barrier, or really, what is it, a 20% decline in price from the top. And so we're not there yet. At the same time, we have witnessed lower pricing, and when you consider that just in the middle of last month, we had this market tracking and trading at 2,100, Dow trading at 18,000. There's absolutely no doubt we have seen dramatically lower prices since then. Traders, we also saw the dollar continue to climb in value in terms of the dollar index against a basket of currencies today, trading up about 22 points or about a 0.25% gain in the market today, trading over 95 at 95.30. When we looked at this chart yesterday, it was my perception or belief that we had a series of tops here and here that could in fact provide some sort of headwind in the market as this market broke above 95, and that would be a possible place that we would want to look at for potential resistance. Now, let's carry this line over. We can see that today's trading activity is actually closed right at and above the former highs, this high here and this high here. So when we look at this on a technical basis, the next level we want to really look at is got to be these bottoms that came in around February of this year, and they're at about 95.50, and that is also the high of the day, high 95.50.2. So we can see that the high is right at this area. So once again, we'll look to see if we find some resistance, but we have had a extremely strong dollar, and based upon statements made by the Federal Reserve yesterday, we are getting follow through in terms of dollar strength, follow through in terms of gold and precious metal weakness, and follow through in terms of equity markets trading lower. One of the things you want to realize is although the dollar is, paired to gold, and we see that direct correlation, a low dollar value against other currencies is very attractive to foreign investors to come into our markets. As the US dollar gains in strength, of course, that value, the exchange rate changes, and it is not as an attractive of an avenue when they look at various equity markets around the world. So we do have some real dollar strength today. And traders, lastly, I do want to look at crude oil. Now, crude oil in essence is unchanged today, trading roughly at 48.11, putting it off 8 cents a barrel or 0.17% drop in price. Very, very nominal price. We have crude up on the top. Although you've got this green, it actually should be a slightly red print in the market, but it's showing 48.16, whereas my quote that I'm actually seeing on the screen, in fact, I'll bring that over so you can see what I'm looking at and what the difference is. I'm looking at 48.11, putting it down off 8. Print is showing us 48.16. So when we look at this, we have a slightly lower crude oil market. The question is whether or not we found some resistance at around 48 or whether it's going to try and run up to 50. And the only reason that I bring 50 into the mix at all is we have seen prices there, but this former top that we had, and this is at the beginning of the year, if we carry this across, you'll see that we are trading we traded slightly above this, little bit of headwind yesterday, and so this could be an area that we do find some resistance. My sense was that it would top out at around 46 or 47, and we certainly saw it move higher than that. So we'll have to see how this market unfolds and whether or not it can sustain this tremendous rise. And when you consider what this market has done, really since February when it hit $26, we've seen this market rise tremendously in terms of value, moving from 26 to 48. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.